Hello everyone, welcome to this episode of Market Pulse. I am Ajit Mahuli, the founder and mentor at LPAT. Let's take a look at what the markets have been doing and are likely to do in the coming week. So as expected, market fell, came back to the weekly EMA and that area of demand zone and are moving up. On the monthly, this is the monthly candle, which is a live candle, and we need to wait for it to finish to understand what it is likely to do. But that's more of a compressive move, and based on the monthly, that the next area of demand is only close to 20,000. No change in that. Uh, on the weekly chart, that's the area of demand zone, which is right now holding up, which has been tested multiple times. So the broader index is in a range bound price action between 21,800 to 22,800. So that's the weekly demand zone where from where we are moving up. And on the weekly, the path of least resistance is at least towards 22,359 to 22,500. That's the area of supply zone. So a narrow range. That's why also the volatility has increased. The India VIX has increased substantially and might remain there till probably the election results are out. So that's what we see, and a good chance that markets might go beyond 400 as well, up to let's say 22,500 based on some short covering. But that's the range, and is going to remain in this probably trading range till we break on either side. Coming back to the daily chart, that's what we see on the daily chart. A nice sideways price action. That's the area of demand zone. And this has just violated but closed within. So prices might again move towards, let's say, first you would see somewhere close to 300, and next you will see somewhere close to 500. So good move to the upside. So if tomorrow markets open up again and then we have a pullback, you can go long. Avoid shorts as of now because today's candle showed that probably short covering is in play and markets might end up moving to the upside. The supply on the daily chart, there is no supply as such. So this is in the middle of the curve. The supply probably starts somewhere close to that area. So that's the reason for shorts you need to wait, and longs can be done on confirmation. On the 75-minute chart, that is the intraday time frame. This is that area of supply which once taken off, you can look at some good longs. That's the intraday demand zone, supply zone, sorry. Need to wait for this to break out. Once it breaks out, maybe somewhere close to 2200, you can again go long, and can be held till at least this area of supply zone, which is about 22,436. Prices are moving up nicely. A good impulse that we saw, but no demand zone formed. So these are all order flow that is moving up from here. So beyond 22,200, you have confirmation, and then you can get aggressively long or get into some bull put spreads because the volatility is India VIX is pretty high and volatility is going to increase. That's India VIX. Nice up move in India VIX on all time frames. So that's the main supply zone on the monthly chart for India VIX. Can prices move all the way there? Yes, definitely, because this is election season where you would see the VIX moving up till the results. And today also, even though markets went up, VIX didn't fall much. On the weekly chart, VIX might settle down somewhere close to these areas. So we are close to 22. So between 22 and 25, we could see the VIX moving up. So you got to be careful about trading in the index if you're not aware of trading FNO. And there are good opportunities in the stocks that you can look at. So that's a weekly supply zone. That's a area of demand zone. from where it is moving up on the daily chart. So VIX, even if it comes down here, there is a good chance it might move up again all the way till closer to, let's say, 22, and then beyond that around 25. So be cautious about volatile markets. What happens in such when India VIX is high? The swings in the markets will be pretty high. So you would see, normally you would see a 100-point move, then you would see 150 or 175-point move. So make sure you trade with strict stop loss. Now let's go and take a look at Bank Nifty. So Bank Nifty moving up from our defined demand or demand zone. So as expected, gave up all the gains of the last month and came to these areas of demand zone here. It's a monthly demand zone. Again, it's going to be in a range bound price action. No supply zone as such. Moving from this area of demand zone, we have now, if I have to mark the demand zones here, it will be number one. And that's the second area of demand zone, which has been from here. So that's what we're seeing. And at least Bank Nifty might make an attempt to move towards these areas. That's a weekly supply. So around 48,400, 48,500 based on the weekly chart. Coming back to the daily chart, it's a nice trending move. Supply zone on the daily is number one here, which was more of a decoy. That's a daily supply zone, and the second daily supply zone is here. But this is not well located. Once we take this off, prices will easily move towards 49,000. So on confirmation, go long, or if you are aggressive trader, look at smaller time frame confirmations. That's what we see on the 75-minute chart. If I have to mark the supply zone, it's here. So at least till 250, Bank Nifty might make an attempt to move tomorrow, and then it might hover around these areas before it breaks out. So remember, we are moving pretty much low from the curve. On the daily chart, that's the demand area from where prices are moving up. And on the 75-minute chart, this is that area of demand zone from where it is moving up. So we'll easily move towards 48,200 to 48,500. And if we break this, new targets about 49,000 will be open. If we get some pullback, let's say on a smaller time frame, if you have to look at, that's the area from where you can look at going long. But looking at the way this has come, if we gap up beyond this, we may just move up. But then these are the areas where you might want to go long. So be cautious about going long in these areas. If you want, if prices don't give a pullback, wait for confirmation and let it come down. Then only you buy, or you can just simply look at good stocks. A lot of stocks have pulled back to good areas of demand zone, and that should give you good entry point in stocks. Maybe index you might not get, but you can look at getting into some kind of spreads on the index. Right? Hope that helps.